Moving on, Carly Holdings has seen its subscription revenue growth hit 100%, and the company's fleet has grown to more than 250 vehicles. To get more details, let's talk to Carly's Director and Chief Executive, Chris Noone. Chris, thank you so much for joining us today, for giving us your time. So congratulations, and tell us about the results. I mean, these are good numbers, 100% subscription revenue growth.
Thank you very much, and great to be here. So yes, we've recorded 100% growth in average revenue in July and August compared to the September quarter last year. So we thought there was a pretty good results. We wanted to get them out to the market before we put our quarterly results out in mid-October. So we've been focusing on scaling the car subscription business, filling the gap between car rental and also longer term purchase and financing of vehicles. And we've been expanding mostly through the consumer market, but now increasingly we're pushing into the corporate market as well.
Yeah, can you tell me about the behavior that's driving the growth? Because, there was behavior during the COVID times and also with the tight supply and logistics, as we talk about with a lot of companies, and then you had people changing their vehicle use behavior. So what is the consumer behavior? First of all, let's go with private consumer before we go to corporate. What is driving their need for car subscriptions?
The key word across both consumer and corporate is flexibility. So often the most wise economic decision you can make is to take longer term finance or purchase a car and own it for a number of years. But for many people, that longer term commitment comes with risks. Their circumstances may change. They may change jobs, their commuting habits, may move to another location. They may have twins. They may have totally different needs for their car. And quite often it's difficult to get out of car finance, or it can be costly to sell a vehicle, and you also may incur depreciation when you sell a vehicle as well. So what subscription allows the customers to do is to get the car that is exactly right for them at that time. If their circumstances change, they can switch the car for another car. And if they need to return the car, they can give 30 days notice. And there are no termination fees. So compared to longer term finance, it's a much simpler way to get a vehicle, but it gives you that flexibility to get the right car for the right period of time.
Okay, and for those who are interested in perhaps investing, looking for small companies to invest in, where's the growth going to come from for this, the rest of the year and also moving into the next fiscal year?
We're seeing a lot more growth in the consumer market. Car subscription is still relatively not understood within the market. So we've got a massive opportunity to educate the market about the availability of the product. When we speak to people, they're quite amazed that our average subscription period is around 5.5 months. And then they start to see the real value of this product sitting in between the rental and the longer term commitment solutions that are already out there. So we expect more growth in the consumer market as we expand our referral partnerships and also our digital advertising. We have referral relationships already in the corporate market, especially with our second largest shareholder, SG Fleet, which is the biggest player in the fleet management and vehicle leasing market in Australia. So they are referring their customers who need access to cars for shorter periods of time to us, and we're serving their needs. We're also expanding directly into the corporate market. We recruited the first member of our corporate sales team this week. So they've hit the ground running on Monday. So we're out there in the market developing that direct business in the corporate, government and not-for-profit markets. Where we'll also grow is with the transition to electric vehicles. And we see that electric vehicle subscription is a great try before you buy opportunity for subscription vehicles. Many people and businesses are interested in moving to an EV, but there are a lot of unknowns, and you can't really understand and quantify those unknowns with a 30-minute test drive like you would do with a normal car. So what we're doing is offering people the opportunity to subscribe to a vehicle for 1, 2 or 3 months, however long they need it, and really get to understand how that vehicle meets their needs, how the charging works, how the range works, whether it's got the right features that are required by the individual or the business. So we see that we can be a big part of the transition to electric vehicles. But as we move into the future, we believe that subscription will be a larger part of the normal mobility spectrum, and we see that people will be increasingly subscribing to vehicles as more often in the future, and especially with electric vehicles, because electric vehicle, it's a little bit like your iPhone. It's new technology, it's constantly changing. Many people may not want to get stuck with the one vehicle. They may want to keep getting the new technology, and in the future, subscription is a great way to do that.
Yeah, Chris, I think that's an attractive proposition, as you say, for people who want to give EVs a try without, committing to it 100%. And yeah, I can see where the growth will be in terms of volume of people subscribing. What is your target in terms of numbers? I'm looking at your subscription revenue just above the under $200,000. And what figure do you have? Is it number of people, subscribers that you would like recurring, or revenue that you're aiming to hit?
We've just hit a annualized revenue run rate of $3 million. So that's increased substantially over the last 12 months, and it's increased by $500,000 since June. So the key metrics in our business are revenue. It is also utilization. So the key metric that everyone within our business understands is the fleet utilization. We want to make sure that we're getting the maximum return on investment from the vehicles that we have within our fleet. Every car that is on the road is not incurring storage or parking expenses and is generating revenue for us. So we aim for very high utilization of the fleet, and we're driving for the maximum number of subscribers possible. Plus, we're also trying to push out that retention period as well. And at the moment, it's sitting around the 5.5 month mark. We think that can increase in the future. So we're definitely driving towards more subscribers and more revenue. We've seen 100% growth in the last 12 months. We think we can probably do more than that in the future.
Chris, a very interesting business model you've got there, and thank you for sharing, about your company. Chris Noone there, Chief Executive of Carly Holdings Limited. Thanks again for joining.
Thanks very much.